Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today is Thursday. It's October the 13th. Thank God it's not Friday the 13th, right? I mean, Halloween is upon us. It's about 7:15 in the morning. The market's going to open up in about 2 hours and 15 minutes. I'm here a little earlier than usual today. Why? Two reasons. One, I have selfish reasons. I have a intro to algo class that's going to be running the next few days. So if you guys send me an email, it may take me a little longer to respond than usual. Number two, we've got a CPI report, and I want to make sure this video is out before the CPI report so you know how to handle yourself before the opening bell. Now, as usual, if you guys are enjoying these videos, if you're getting something out of it, like this channel, subscribe to it, and most importantly, comment. Put a comment. I will respond. I like responding to these comments because they benefit others as well. So it takes care of a lot of things at once. Anyhow, let's get into today's analysis. The Dow's up about 159. NASDAQ is up 30, a little bit beyond random. Now, I'm really happy about it for two reasons. Number one, as you will learn right now in my global report, Asian markets actually went lower overnight, but the U.S. markets shrugged it off. The last couple of, more than a couple of weeks, about three and a half weeks, most of the downside that we saw post-earnings last quarter was due to global economy catching up to the U.S. economy, basically falling out of line just like U.S. has been. Europe, Britain, Asia, it's been really, really tough. Another thing we need to pay attention to, today's Thursday, finally it's Thursday, and we've got all these earnings coming out. The big one's going to be Taiwan Semiconductor, Delta, BlackRock is going to be a big one, and Walgreens. Progressive, too, for insurance. Insurances have been under fire after this hurricane that we had here in Florida. And you can see here on the right side all the estimates. Some of these are going to be out before the opening bell, and some of these will be out after the opening bell. Officially, the big earnings season is beginning now. Now we'll be able to track things. Estimates have gone down from 9.8% to 2.6%. Tomorrow, we've got JP Morgan, Citibank, Morgan Stanley, US Bank, United Health. This is a big one, and Wells Fargo. I hate Wells Fargo. These are the estimates. And as you can see here, I'm very interested more over the numbers. I'm interested in their forward-looking statements. And I'm interested in seeing how the financial sector is going to react. This is going to be the biggest one tomorrow, and then Morgan Stanley. Those are the two big ones. But again, these are really big, and they're going to set the tone for some of the stocks. Now, let's get into Fed data. Yesterday, we had the PPI. It wasn't horrible, but it was really bad. I mean, it wasn't good. It wasn't pretty. The numbers were not lower. Now, today, in about an hour and 12 minutes, and this is one of the reasons why I'm doing this early, we have the CPI report. Now, this is going to be the last report. This and retail sales is going to be the last two reports that the Fed are going to pay attention to before making up their mind. Now, what they look at is this number right here, X food and energy. This is the headline CPI. They don't look month over month, so just ignore these two. They look at year over year. They look at energy. Anything 6.3 or lower would put us in a much better position than we're at right now because it would give the investors hope. I know it's a very, very dirty four-letter word, hope, that inflation, that what the Fed is doing is in fact working. Because if what they're doing is not in fact working, they're doing a lot of damage right now. So we're all hoping that it's working, but this is the main number. This is going to be an important number, 8.3. They're expecting it to go lower. I'm pretty confident the headline number is going to be lower because the PPI numbers have been coming down. But food and energy and inflationary pressure has been coming down on food and energy somewhat. And remember, this data is delayed and it'll be revised. But right now, they're expecting 6.5. I'm hoping that the number is 6.3 or 6.2. I'm really hoping. Fingers, toes, everything crossed, waiting for it to happen. So this is the big number. It's coming out at 8:30. And then tomorrow, we've got retail sales. And I'll talk about that before. We also have jobless claims today. But quite honestly, the number has been very solid. We've been around 220,000. As long as we're within the 200-day moving average, and the 200-day moving average is right around 206,000. Even if we're at 220,000, the number has not been going up exponentially. If the number goes up to about 350,000, that would be something, and that would give a reason for the Fed to pause. So I'm actually kind of not, I don't want the number to get higher, but I kind of do, at least in the transitory, right? Wink, wink, transitory time period. We want the number to get higher. That way the Fed may say, well, people are losing their jobs. Us increasing rates is just a double whammy. So let's talk about momentum right now. Put the call ratio still above 1. Look at that. And anytime you have it in this zone from here to here, this is from the 120 to 100, that means the market is oversold, stretched out. That rubber band is down to the tilt, and I'm expecting the market to cool off, especially after hitting historic, and I say historic levels, about 3 weeks ago. They still haven't come off of them, but we do need to cool off, and I think the market is setting up for some upside. As far as volatility is now at the highest or near the highest level we've seen this year. And typically when we've seen it go above these levels, even up here, it tends to cool off. And I think we've seen the most of it. And let me just show you a couple of other things. Momentum levels on the NASDAQ appear to be stabilizing and churning. The number of stocks breaking down is still 224 to 18. Now, I know the ratio's high, but until this number gets to 400 or 500, that's not a serious selling pressure. That's just stocks kind of moving along, treading along. That's why you're not seeing much follow through to the downside or to the upside. Now, as I mentioned, momentum levels on the NASDAQ are at the bottom. This is 2008. We were at 10. We're right now at 6. And if you look at major indices, you will look at this. 16%, 16%, 27%. I mean, just to give you some perspective. Look at where we're at right now. Look at where we're at right now. And this is going back as far as it'll go. It just doesn't go beyond 14. So it's like, 8 years of data? We're really, really, really low right now. And when you look at utilities, I want to show you something interesting. This is something interesting. We are right now right at that level we've been to. We just broke that level, and I don't think it's going to break much further. So what I'm seeing right now is I think that markets are going to revert back into their range. Also, some positive news. The Russell 2000, look at this. It never broke the bottom, and now it's higher. And Kathy stocks are just tipping the bottom right now, and they cooled off. Look at that, right at the bottom. So to me, it looks like the market had a nice little shake off, and now it's starting to come up. You're also starting to see sectors much more in line with each other. Not completely, like utilities is messing this up, but consumer discretionary is not behind energies anymore, right? It's all the way down here. And I think utilities is going to start popping back up, which will give consumer discretionary a little more downside, which will put consumer discretionary technology and communication services where they belong, and the 3 or 4 most defensive sector, including utilities, up on top. So I do believe we're going to see it. Now remember, today's Thursday, and Thursday, what do? I always Thursday give you my the top ETF and option pick. But first, let me go through Asian markets and European markets overnight, and then I'll kind of back into that. I want to kind of review everything we just talked about and kind of put everything in the right place. So Asian markets fell ahead of U.S. inflation data, but U.S. stocks stayed strong. That's a change from what we've been seeing a few weeks back. Investors are worried that the Federal Reserve plans for more aggressive interest rate hikes. Well, if jobless claims are really bad, and if inflation's coming, if the core number's down, it's going to make it harder for them. S&P ended lower after inflation in the producer's price index edged down near a multi-decade high. More closely watched consumer price index, that's what we're talking about, will be out today at 8:30. Way after you watch this video. You're welcome. I wanted to do it to give you plenty of time to prepare for the session. The Fed, other central banks have raised rates by an unusually large margin to cool inflation, but it may put us into a nasty recession, worse than we're in right now. Again, producers' price index was very hot. Price rose 8.5% in September, down from March's peak of 11.7%. I can't even believe it was 11.7%. I must have blocked that out. But they've been declining, and that we're hoping that we're going to start seeing what the Fed is doing actually working. Consumer inflation on Thursday and retail data on Friday, that's retail sales data, could give a clearer picture of where prices are hottest and how consumers are reacting. I think I know how consumers are reacting. I think we all know how consumers are reacting. We just want to know what the data is. Minutes from the last meeting released yesterday at 2 p.m. underscores the central bank's commitment to taming unacceptably high inflation. Remember, the one that was transitory. It's transitory, I tell you. Pow! What an idiot. Dollar continues to strengthen after hitting a 24-year high. That's because money's coming into the U.S. because of this amazing inflation we've been seeing. The dollar's exchange rate has been rising against other currencies due to the Fed's rate hike and recession fears. The yen's weakness has prompted expectation that the Bank of Japan might intervene for a second time, which wouldn't be good for the U.S. market. That's one of the things that caused U.S. stocks to cool off a lot. So now, because it's ETF season, and I want to show you where I'm at right now. Energy, healthcare, consumer staples. Honestly, let me show you what I'm looking at right now. Let me look at consumer staples real quick. So consumer staples look like they're really, really bottoming out right here. And I believe it's a good time to start buying. So I'm willing to go into consumer staples, and let me show you the option I would pick. Probably go to January. Got plenty of time left. Historic volatility and implied volatility are not all that different from each other. They're cheap too. Look at that. They're cheap. Look at this. They're not expensive. They're last was $3.20, $3.70. You can get them for about $3. So my suggestion is honestly, I'd go to the 68. It's got nice open interest. 68, you could probably get it for about $3. And you could probably spread it against, I wouldn't even spread it. I would just buy the 68 or maybe even the 69 if you can't afford the 68. But I would just do an option. I think we're going to have a rallying, especially in consumer staples, because remember, it's a defensive sector, and I think it's going to move higher. Keep your eye on the CPI. If the market can rally after the CPI, more likely than not, it'll continue to gain strength, and it's grossly oversold and volatility is a little too high. So I'm expecting a shakeout or potentially more upside in the next few days. Now, let me tell you what you need to pay attention to. Look, no one wants to work on Saturday or Sunday. We get it. I don't want to work on the weekends. Traders from Wall Street to home offices grind it out Monday through Friday, waiting for the weekend. But there's a secret. They're neglecting the fact that money may be up for grabs. And New Money Crew head trader Lance Ippolito, he's discovered a rinse and repeat plan that anyone with a cell phone and a brokerage account can take advantage of, even on a weekly basis. I love this. Click the link below, learn more about Wiretap alerts and how to make the most of each weekend. You guys are going to love this. Lance has been red hot lately with his wiretaps. This weekend wiretaps are amazing. Follow the link below. Check it out right now, and I'll talk to you soon. Bye, guys. Have a great day. Remember, email me, support@marketgeeks.com. Post comments below the video. I will respond to them. Yes, I will. Bye. Have a great day. I'll see you in the algo program later today. Wink, wink.